Coming up on Market to Market, the president takes a victory lap on E15. One Midwestern state looks to keep their communities on the map. And market analysis with Mark Gold next.
The wheat market over the last week or so, I kept saying.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, June 14 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. Country legend Willie Nelson's "Worry Be Gone" may best reflect current concerns about the U.S. economy. The Commerce Department said retail sales rose 0.5% in May and revised April's number upward. The government says inflation is under control. The latest producer price index reveals 0.1% increase in wholesale goods, and that's translating to lower costs for gasoline, electricity, and used cars. The consumer price index also ticked up 0.1%. President Trump has made promises to help rural America. He has followed through with aid to counter markets, loss to tariffs, and open doors to the increased use of ethanol. Biofuels are a hot-button topic when oil and renewables cross paths. Late this week, a bipartisan effort was introduced in the Senate to increase transparency in the small refinery exemption process. Those waivers have been a cloud hanging over the ethanol industry. David Miller reports.
President Trump took a victory lap through Council Bluffs, Iowa this week to formally announce a promise he kept on E15.
We lifted the restrictions on E15 just in time to fuel America's summer vacations. We just made it.
The ethanol industry has spent the last decade pushing for year-round use of the 15% ethanol blend in motor fuel. It remains to be seen what kind of growth will be experienced in light of drags on overall sales, including limited access at the pump, continued attacks from petroleum groups, and small refinery exemptions, or SREs. Ethanol refiners and industry advocacy groups like the Renewable Fuels Association are among those who dislike how some SREs are handed out.
We cannot afford to see this victory on E15 undermined by more exemptions for small refiners from the RFS. That's been a big problem for our industry the past few years. It has eroded demand. It has undermined the renewable fuel standard. If we put a stop to those exemptions in tandem with this E15 announcement today, we think things are pretty bright for the industry.
Access to E15 remains a major hurdle for industry expansion. In Iowa, the nation's #1 ethanol-producing state, only 15% of the gas pumps can legally dispense E15 into all cars and light trucks built since the 2001 model year. According to Fuel Iowa, a fuel marketer and convenience retailer lobbying group, a retrofit for an existing station can cost up to $500,000. The ethanol industry also suffers under continued attacks about the efficiency and ecological benefits of the fuel additive, with the most recent coming from the Government Accounting Office. Emily Score is the CEO of Growth Energy, a biofuels trade association.
There's a wealth of data by national laboratories, USDA, Argonne Laboratories, EPA, others talking about the environmental benefits of ethanol. We know for a fact that ethanol reduces greenhouse gas emissions by 39%, and we know that farmers and ethanol producers are doing more with less.
America's farmers are not just the keepers of a cherished legacy. You are the guardians of a way of life, a great, beautiful way of life.
And the day before the president came to Iowa, the American fuel and petrochemical manufacturers brought a lawsuit against the EPA. The suit did not request an injunction, but did call into question the federal government's authority to grant a waiver for E15.
That rule here,
Mike Naig is Iowa's Secretary of Agriculture.
But we know that there's still a lot of work to do to make sure that we've got the right policies and the right regulatory structures in place in Washington to make sure we can continue to support this really important industry. So we'll celebrate today, and we'll be right back to work tomorrow, making sure that we're advocating for this industry.
For Market to Market, I'm David Miller.
The federal government is moving some USDA operations out of Washington, D.C. and into the heartland. More than 500 economists and researchers will be transferred to the Kansas City metro area. Every job matters when it comes to the economy of both urban and rural communities. The smaller the town, the more each paycheck helps the vitality of a region. As our fourth and final installment documenting one family's transition from the city back to rural life, John Torpy finds this to be especially true. His report is our cover story.
As the Embry-Minders family approaches the one-year anniversary of their move to Burton, Kansas, Joni Embry-Minders is just beginning to feel settled in as the farm family faces tumultuous times. Low commodity prices, trade wars, and torrential rain have plagued rural Kansas farmers for several months. A longer-term problem facing Embry-Minders' hometown of Burton, Kansas, and many other small towns and farms across the country, is a dwindling population.
Let me ask my husband.
Upon their return, the Embry-Minders family gained an up-close view of what population loss looked like in their community.
I don't get welcome home or welcome to Kansas or anything like that. What I get is, we are so glad you're here.
Metro population centers like Wichita witnessed growth of almost 15,000 residents between 2010 and 2018. In Harvey County, just outside of the Sunflower State's largest city, the population decreased almost 1.5%, losing nearly 500 people over the same time period. According to the U.S. Census Bureau, Burton, Kansas has lost 6% of its population since 2000. Population gains that rural areas do experience are often offset by an advancing mortality rate and general migration away from smaller communities.
What's going to happen to all these farmsteads? Because people aren't moving out here. They're moving into town or leaving and not coming back. You know, what's going to happen to all this out here?
The exodus of rural populations has hurt communities in many ways. With fewer people spending money in town, fewer tax dollars come into community coffers. Rural businesses are already experiencing a customer shortage, which ends up hurting the bottom line and the future of small towns. When a farmer's equipment breaks down, they count on making timely repairs to get back in the field as soon as possible. Near the town of Mount Hope, Kansas, Howard's Incorporated has been helping farmers get back to work quickly for almost a century.
We try to take care of the smaller farmers and the needs of a big farmer. We don't sell any big machinery. We sell a lot of small machinery, and we have about anything to fix anyone up.
Howard prides himself on having parts on hand for countless models of farm machinery. He notes in the current economic times, farmers are trying to do more with less by keeping older equipment in good working order instead of buying something new. But for Howard, the number of customers visiting his store is declining.
But so many of our farmers are retiring, and bigger farmers are taking them over, and we have less and less young farmers. I would love to find some young person with some ambition to buy it, because my wife and I started this business with nothing, and we've worked all our lives, and I hate to see it disappear, and it's going to be tough on the farmers when we do disappear. But I have no idea what the future holds.
According to data from the University of Kansas, the number of people living in Burton peaked in the 1980s at 976. The population has been in steady decline ever since, hitting 874 in 2017.
So Burton is not unique in the declining population. Just it's a statistic across the country, and so I don't see it different than a lot of other towns where you're trying to sustain businesses, trying to recruit businesses, trying to sustain housing and roads and infrastructure. You try to run that balance of what improvements can you make, what improvements should you make, and in what order should those take place, because your tax base is small. And
shortly after being sworn in, Governor Laura Kelly, a Democrat, created the Office of Rural Prosperity. The group's mission is to take a deep dive into rural Kansas issues to see where the most help is needed.
We put this office together so that everything that we do, whether it's policy or budget, is filtered through the lens of our rural community. And we'll be focusing on all the issues. Hospital is one of them, but we'll also be looking at housing, education, telemedicine, and beyond.
There was a glimmer of hope for rural population growth in 2017. According to USDA data, an improved labor market, higher incomes, and an improving real estate market helped numerous counties stop a 6-year decline in population. However, an increase in retirements and migration to metro areas led to population growth only breaking even.
We really want to help local communities decide what is prosperity to them. Some, it might be opening a community center or a place for coffee. Others, it might be moving them on to the next step. They've had a multiple year task of putting in housing and tourism and agribusiness. And so we want to work with local communities.
Lieutenant Governor Rogers will be leading a group from the Office of Rural Prosperity on a 12-city fact-finding journey across Kansas that begins in June and ends in late August. As for Joni and Zach, they have stopped working on the young farm and have taken off-farm jobs. The couple hopes to set themselves up to eventually own their own operation. Until then, they continue to have their sights set on a future in farming that includes a pathway for their children.
And this, like Joni said before, it's really for the kids. So if that opportunity is what they want to be able to do, which Colby, that's his main focus. So if that's what they want to do, at least that opportunity is there for them when they get older.
For Market to Market, I'm John Torpy.
Next, the Market to Market report.
Corn traded in territory not seen since May 2014 as the USDA came to the realization the 2019 crop may be in trouble. For the week, July wheat jumped higher by 34 cents while the nearby corn contract rocketed up 37 cents. Spec funds joined weather in running the soy complex higher. The July soybean contract improved 41 cents. July meal gained $11.20 per ton. July cotton increased 41 cents per hundredweight. Over in the dairy parlor, July Class 3 milk futures added 21 cents. Another mixed week in the livestock markets. August cattle gained 98 cents. August feeders declined $1.72, and the July lean hog contract fell $2. In the currency markets, the U.S. dollar index reversed course and gained 106 ticks. July crude oil lost $1.39 per barrel. COMEX gold was mostly even, and the Goldman Sachs commodity index decreased a point to finish at 405.25. Joining us now to offer insight on these and other trends is one of our regular market analysts, Mark Gold. Mark, welcome back.
Thanks, Delaney. Nice to be here.
We've had quite the week in the grain markets, especially. Let's start off here chatting about the wheat market. Is the wheat market primarily being rallied at this point because of the rallies going on in the corn market?
It's been a couple of things. The rally in the corn market's got the funds nervous. They came in short, 50,000 contracts of wheat. I think they've since covered most of that. We have the dryness in Australia. We have the dryness in Russia. So it's not that we're running out of wheat anytime soon, but it was kind of a Me Too thing, and the funds didn't want to take any bigger losses than they've taken. So it looked like they came for the wheat as well.
Okay. And tell me, Mark, just a little bit here. The KC Chicago intramarket spread pushed to a new low this week. What does that indicate to you about the wheat markets?
Well, I think it indicates the funds were heavily short Chicago, and they had to come for Chicago wheat. It's been very strong relative to the other markets, and I think we're going to continue to see that here for a while. If the funds want to get long, they'll generally come to Chicago first and then Kansas City. So there may be some more upside here. But the wheat, we're not running out of wheat. We don't have good demand. The dollar's still strong. So the wheat probably isn't the star of the show right now.
It's not the star of the show. I would say corn is hands down the star of the show at this point in time.
No question about it.
Let's talk about the corn markets, because we have just been chugging along. We've broke through another area of key resistance this week. So Mark, my question is, I don't think it's if we will hit $5. I think it's when will we hit $5.
Well, there's still an if out there. It's been very strong. I think we're going to go higher. As I've said many times on this show, we generally make our highs the last Friday or Thursday or Friday of the month. So we could do it on the Thursday. We might do it on the Friday when we get the acreage numbers. But the corn has been spectacular. Yeah, I think we're worth more than it is today. And we had a pretty nice day here today. We've blown through all the resistance for the near term. 445 was a big number. 455 was another big number, depending on December or July. And we've just blew through those today. And the market looks awful strong here. The funds are now long, I'm guessing, 150,000 contracts of corn. There's some talk about a squeeze in the July contract. We've seen the spread go from 20 under to I think it was 7 under at one point today. So the market's moving. We like to see the demand pick up a little bit. The export demand has been soft. Ethanol demand's been good, but this is all about how many acres have gotten in and what's going to be the yield drag on the acres that have been planted.
I want to come back to the yield and the yield drag question, but we have a really good question on social media this week from Matt in Amherst, Wisconsin, talking about that export problem or piece of the puzzle. He said, at what point does demand destruction show up to the party in these grain markets?
Well, that's a great question, and it'll eventually show up. The higher we go, the more. Look at the exports. We're not exporting a whole lot of corn. The feeder cattle market is certainly telling us that corn has moved higher, is going to continue to, most likely to move higher. At some point, we will see a switch in demand. But I don't think, when you look at a long-term continuous chart on these grains, particularly the corn, we've had a 4-year base here that's been broad, wide, and now we've just kind of shot up. But if you look at where we've shot up to, there's a lot of room left on the upside.
Yeah.
So, back to your question about $5 corn, I think we've got a reasonable shot at, 485 to 490, somewhere in that range. $5 will be a big psychological spot, but I think we can get there.
I think that maybe part of the question that still remains about will we hit $5 corn is really the acreage question, and then also, of course, the yield drag question. We saw WASD report this week, and USDA adjusted especially the yield. Mark, do you think they're going to have to come down a little further even?
I do, and I think they're going to have to come down on acres planted, and I think they're going to have to come down on yield. It's unprecedented that the USDA on this report made these kind of changes. We've never seen that before. But this is an unprecedented situation, even unlike 93. 93, we got the corn in the ground, then we had the flood, but the flood stayed right along the Mississippi River, and it wasn't this broad base that we're seeing out here. So this is a different ball game out here. We know we had 15 million acres left to plant last week. I'm sure we've had a couple of good days around the country to plant. Is it going to get washed out in the next couple of days? They're talking about 3 to 6 inches of rain in Illinois, Indiana, Ohio, parts of Pennsylvania. So a lot of it could get washed out again. We believe that the prevent plant acres are going to be somewhere around 10 million. The government says 3 million. We think they're off. They've taken the yield down by 10 bushels to the acre. Maybe on the corn that's out there, it's okay. But the crop rating I thought was ludicrous. And I think that's going to start to come down if they blend in all the unplanted acres. If they're just going to look at the acres that are planted and say, well, the crop looks like it's in pretty good shape. Well, yeah, the stuff they got planted looks okay in a lot of spots. But I think we're losing more and more production. We're going to have to get to a certain price here. But we still have big carryouts. And then there's that demand factor from your question. That's going to start to back off at some point as well.
So, Mark, I've got to probe just a little bit harder here.
Okay.
Those are a lot of bullish factors for the corn market. Demand aside, how can you not say that we'll hit $5?
Well, I don't want to be the guy on TV that says, corn's going to $5 because the problem.
That's not $8. That's still a.
Yeah, it's still a good spot, no question about it. But what's important for your listeners to understand is maybe we do go from $4.60 to $5. Does that mean they shouldn't be marketing between here and $5?
Definitely.
And let's wait till everybody gets to $5 before we do something? No. So these things, as I said, I think 6 months ago here, these markets can turn on a dime. And it took them till May 1st to do it. But when they did it, they turned on a dime. Really, this corn market over $1, the beans over $1, the wheat $1. Can we turn the corner again and flip the switch the other way? You bet we can. All it takes is one presidential tweet to send this market south in a hurry, or the weather gets better, we get the crop in the ground. I remember myself and a lot of people thought the wheat crop back in February, March, and April was done. And we couldn't understand where they're getting these 60, 64% good to excellent ratings out here. American Farmer does a great job, and even though we've only got 80% planted, if we can get to 90, 95 and still have a good crop, production can go back up. And again, at these high prices, demand will start to wane, particularly with the dollar as strong as it is.
Okay, we've got to move on here to soybeans. I know corn has definitely been the leader this week. Soybeans have also had a pretty good week. Mark, is it weather related or because of the spec funds?
Well, the spec funds are still short, maybe not after tonight. They're getting pretty close. They had been short 60, 70,000, I think, coming into the week. I think they've probably done a pretty good job of covering that. They're still short the bean oil. I think they're short 50, 60,000 contracts of oil. That could be a push up. But today, the oil was the drag on the market. The meal remains strong. The funds are long. A little bit of meal now. But the beans, if we only had 15 million, we had 15 million corn unplanted acres. We got 35 million unplanted bean acres as of last week. Now, we've got the rest of the month to get the soybeans in, and I think there's been a lot of work done today, tomorrow, but then we get the rains again tomorrow. We get another 3 inches, it looks like, during the week. Is that going to get washed out again? We don't know, but the USDA made a very poignant comment that said, we're not adjusting beans now because we don't have the data to back up either lowering the production or the acres or the yield. In my opinion, both are coming down in a big way. We're not going to plant everything they think we're going to plant, and the yield drag is going to be significant, in my opinion. And everybody wants to be short beans because of a billion bushel carryout out here. But you can knock 500 million off of that in a quick heartbeat and have a market again that takes you back to 10 or 10.50.
Okay, let's save that to unpack during Market Plus, folks. You can, of course, find that online at iptvmarket.org. Okay, so live cattle markets, will cash be able to strengthen, or are the grains impacting that way too much at this point?
Well, the corn is certainly pushing the feeders down. It's pushing the hogs down. The fats have hung in here, but at lower prices. The cash market's been a little bit soft, 110 to 112 this week. Generally, in the next month or so, we should start seeing the numbers of cattle on feed start to come down. Where I don't know how many months it's been where we've seen bigger and bigger numbers every month. We think that's going to turn around. That doesn't mean that we couldn't have another $4 or $5 risk in this cattle market, particularly if the corn does go to $5, you're going to see lower cattle prices, in my opinion. It's been a horrendous grilling season so far.
The weather has just not been cooperating.
It's been terrible. So that's put some pressure on the cattle. The demand isn't there. Unfortunately, this Beyond Meat, I'm not going to eat it, but it seems to be getting some headlines, and the stock seems to be doing okay. And is there a shift in taste? Perhaps. I hate to see it, but seems like the millennials love this stuff. So.
I think there has been a change, that's for sure. That's definitely something to continue to watch. Mark, let's end our show here, of course, with the hog markets. Are they looking for a short-term low here?
Well, we've done a pretty good job of breaking this market hard. We're getting into some support areas, another $2 to $3 down. We had a pretty bad signal on the charts tonight on the close, but sometimes it's a 1 or 2 day thing and we can come back. But I think $80 hogs are fair as long as we don't wind up with any African swine fever here. If that should hit, then it's a problem. So as a risk manager, would I still be rolling down puts, keeping those puts in place, taking money out of it? when we can. Yeah, but we still want to have a floor in case there's a surprise out there.
Okay, hopefully we don't get that surprise.
Hopefully.
But Mark Gold, thank you so much.
Thank you.
That wraps up the broadcast portion of Market to Market, but we will keep this conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at markettomarket.org. Facebook allows you to keep track of many interests, including those in rural America. You can find our links and photos at IPTV Market. Join us again next week when we'll explore how one state is filling a vital need by expanding its housing stock. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.